Seeing is believing is a popular phrase that many of us choose to follow when in doubt. Yet, there's love, faith, ideas, knowledge, emotion, and values that are not visible to the human sight, but are known to exist. All businesses have assets, which are divided into two types. 1. Tangible assets, and 2. Intangible assets, both of which add value to the business. Many of us are familiar with tangible assets, which are physical assets such as land, vehicles, equipment, machinery, furniture, and cash. However, some of you may be asking how an intangible asset that does not exist physically can be considered an asset related to a business. That's a valid point, but we're here to help you figure it out. Pass 38, paragraph 8, states that an intangible asset is an identifiable, non-monetary asset without physical substance. Common examples of intangible assets include computer software, patents, copyrights, motion picture films, customer lists, mortgage servicing rights, fishing licenses, import quotas, franchise and marketing rights. However, these items should have the essential elements to be recognized as intangible assets. What are the essential elements of an intangible asset? We have 3. 1. Identifiability, 2. Control, and 3. Future economic benefits. 1. Identifiability. For non-physical items, it may be trickier when it comes to identifiability. But an intangible asset is identifiable when A. It is separable. This means that the asset is capable of being separated, sold, transferred, licensed, rented, or exchanged, either individually or together with a related contract. B. It arises from contractual or other legal rights. This is regardless of whether those rights are transferable or separable from the entity or from other rights and obligations. Simply put, identifiability means that although you may not see it, but you know it's there because there are indications that it is identifiable. 2. Control. The entity must be able to enjoy the future economic benefits from the asset and prevent others from enjoying the same benefits. It would normally stem from legal rights that are enforceable in a court of law in case of trademark, copyright, and patent. 3. Future economic benefits. This includes revenue from the sale of products or services or other benefits resulting from the use of the asset by the entity, which may also include cost savings. But how about assets with both tangible and intangible elements? In determining whether such asset is to be accounted for as PPE or intangible asset, the entity uses judgment to assess which element is more significant. For example, the computer software of a computer-controlled machine that cannot function without the software is an integral part of the hardware. The software is treated as PPE. The same applies to operating systems. Microsoft Windows 10 of a computer, since a computer cannot function without an operating system. However, if the software is not an integral part of the related hardware, for example, application software such as accounting system, then it is treated as a separable intangible asset. In other words, if the intangible component is an integral part of the asset as a whole, then the intangible element shall be treated as PPE. Otherwise, it is treated as a separable intangible asset. Recognition. An intangible asset shall be recognized if the following conditions are present. A. It is probable that future economic benefits attributable to the asset will flow to the entity. B. The cost of the intangible asset can be measured reliably. Measurement. Initial measurement, pass 38, paragraph 24, provides that an intangible asset shall be measured initially at cost. The measurement of cost depends on how the intangible asset is acquired. Intangible assets may be acquired through 1. Separate acquisition. 2. Acquisition as part of business combination. 3. Acquisition by way of government grant. 4. Exchange of assets. And 5. Internally generated intangible assets. Separate acquisition. The cost of a separately acquired intangible asset comprises purchase price, including import duties and non-refundable purchase taxes after deducting trade discounts and rebates. Any directly attributable cost of preparing the asset for its intended use, example, cost of employee benefits arising directly from bringing the asset to its working condition, professional fees arising directly from bringing the asset to its working condition, and costs of testing whether the asset is functioning properly. Acquisition as part of business combination. If an intangible asset is acquired in a business combination, The cost of the intangible asset is based on the fair value on the date of acquisition. Acquisition by way of government grant. An intangible asset may be acquired by way of a government grant, free of charge or for nominal consideration. This may occur when a government transfers or allocates to an entity intangible assets, such as A. Airport land rights, B. Licenses to operate radio or television stations, and C. Import licenses or quotas or rights to access restricted resources. The intangible asset acquired by way of government grant may be initially recorded at either A. Fair value, B. Nominal amount or zero, plus any expenditure that is directly attributable to preparing the asset for its intended use. Exchange of assets. An intangible asset may be acquired in exchange for another non-monetary asset. The measurement of intangible asset acquired depends on whether the exchange transaction has commercial substance or not. A. With commercial substance. An exchange has commercial substance if the entity's subsequent cash flows are expected to change as a result of the exchange. The intangible asset received is measured using the following order of priority. 1. Fair value of asset given up. 2. Fair value of asset received. 3. Carrying amount of asset given up. B. Lacks commercial substance. The intangible asset received is measured at the carrying amount of the asset given up. No gain or loss arises if the asset received is measured at the carrying amount of the asset given up. Internally generated intangible assets. To determine whether an internally generated intangible asset meets the criteria, its generation is classified into A. Research phase and 2. Development phase. Research is original and planned investigation undertake with the prospect of gaining new scientific or technical knowledge and understanding. Costs incurred during the research phase is expense because during this phase, an entity cannot demonstrate the existence of an intangible asset that will give future economic benefits. Development is the application of research findings or other knowledge to a plan or design for the production of new or substantially improved materials, devices, products, processes, systems, or services before the start of commercial production or use. Costs incurred during the development phase are capitalized if the entity can demonstrate all of the following. 1. Technical feasibility of completing the intangible asset. 2. Intention to complete the intangible asset. 3. Ability to use or sell the intangible asset. 4. Probable future economic benefits. 5. Availability of adequate resources needed to complete the development. And 6. Reliable measurement of the cost of the intangible asset. Subsequent measurement. After the initial recognition, an entity chooses either the cost model or the revaluation model as its accounting policy and applies that policy to an entire class of intangible assets. Cost model. An intangible asset should be carried at cost, less any accumulated amortization and any accumulated impairment losses. Revaluation model. An intangible asset shall be carried at its fair value at the date of revaluation, less any subsequent accumulated depreciation and subsequent accumulated impairment losses. Amortization. Intangible assets with limited or finite useful life are amortized over the shorter of its useful life and legal life, if any. Intangible assets with indefinite useful life are not amortized, but are tested for impairment, at least annually and whenever there is an indication that the intangible asset may be impaired. An intangible asset that has a legal life that can be renewed for an indefinite number of renewals without restrictions is also considered an intangible asset with indefinite useful life. Amortization shall begin when the asset is available for use, meaning when the asset is in the location and condition for its intended use. Amortization shall cease when the intangible asset is derecognized or when the asset is classified as held for sale. Example. On January 1, 2021, Rachini Company purchased a patent from Merrilee Company for 300,000 pesos. Merrilee Company, the original owner, has held the patent for 5 years. Rachini Company estimates that the patent has a remaining useful life of 16 years. The annual amortization expense is computed as follows. Cost 300,000. Residual amount 15,000. Depreciable amount 285,000. Divided by shorter of useful life and remaining useful life 15 years. Then annual amortization expense is 19,000 pesos. Take note that 20 years legal life of the patent less 5 years held by Rochany Company is equal to 15, which is shorter than the 16 years useful life. The carrying amount of the intangible asset on December 31, 2022, after 2 years, is determined as follows. Cost $300,000. Accumulated amortization is $19,000 multiplied by 2 years, which is equal to $38,000. With that, the carrying amount on December 31, 2022 is 262,000 pesos. Derecognition. An intangible asset is derecognized when it is disposed of or when no future economic benefits are expected from it. Gains and losses arising from the derecognition of an intangible asset shall be determined as the difference between the net disposal proceeds and the carrying amount of the asset. Derecognition gains shall not be included in revenues, but treated as other income. Congratulations! You have successfully learned what intangible assets are.